Hello, this is Professor Reynolds, and I just wanted to kind of give you an overview of this particular chapter. So we're going to be looking at chapter two. Let me get to chapter two. And we're going to be talking about job order costing. And next chapter is chapter three. We're going to be talking about process order costing. So really, job order costing system is you have the job order costing, which we're going to be assigning costs for materials, factory labor, factory overhead, work in process, finished goods, sales cost, and goods sold, and period costs. So we're going to be looking at two different systems. One, of course, is the job order, and that has to do with more specialized type products. So if you're making certain guitars, you might make this type of guitars, and so you wanted to be able to assign costs to those guitars. Again, you have to allocate overhead in some fashion. Okay? All these costs have to be accounted for. And so we are going to first go over the job order. So you have cost systems, measure, record, and report product costs. Managers use product costs for setting product prices, controlling operations, and developing financial systems. And the main types are the job order and the process costing. So the job order provides product costs for each quantity of a product that is manufactured. Each quantity of product is called a job. And so we are going to make guitars. Here's a summary of Legend Guitars manufacturing operations. Again, you have direct materials, you have work in process, you have finished goods, and then you have your direct labor, direct material, and then you have to allocate your overhead. Really, this is what we're looking at: is how do you allocate overhead? Process costing provides product costs for each manufacturing department or process. Okay, it's used by companies that manufacture units of production that are indistinguishable from each other and are manufactured using a continuous production process. All right, and that's what we'll look at in next chapter. So, in other words, again, oil refineries, paper products, chemical processes, food products. So they're all, similar type products. They're not like guitars or pianos or even automobiles. Hybrid costing is sometimes called operations costing. It has elements of both. Okay. For instance, a custom recreational vehicle such as Winnebago Industries custom motorcycle. So, how do we account for the cost? Well, again, you draw materials from inventory. And we'll look at the journal entries, but really a journal entry, basic journal entry for inventory is you're going to debit inventory, you're going to credit an accounts payable or credit cash if you're going to pay in cash. And it doesn't matter whether it's raw materials, work in process, or if it's finished goods, you're going to debit the account it's going into and you're going to credit the account it came from. So when you take materials out of the storeroom and you start working on them, at that point, you're going to debit work in process and credit your materials. Same thing. Once you get it out of work in process to finished goods, you're going to debit finished goods where it ends up, and you're going to credit those costs in work in process because, again, it's no longer in work in process. And you can see here that you still have jobs 72 and 71 in work in process. So at the end of the month, when you're going to be looking at your inventory, you're going to be looking at all of the costs related to job number 72 and 71. Meanwhile, you have completed job 70 and 69. So you're going to be debiting finished goods for the cost of these two jobs, and you're going to be crediting work in process because, again, you're taking them out of work in process inventory, moving them over to finished goods. And when you sell these, then it's going to be cost of goods sold. So if this job 70 was for one particular store, and then you sold it to that store, now you're going to debit cost of goods sold, credit finished goods. You have these inventory ledger accounts, again, materials inventory. So once you move from materials inventory to work in process, same process, debit, credit, debit, credit. Materials, again, this is just a record of the materials accounts. Okay, well, we bought materials, wood. All right, so we're going to debit the account, so that's going to increase the account. We used wood for this job, so we're going to credit this materials account, debit the work in process for materials, and then each job is going to collect this information. So you're going to collect the information. You go, okay, for this job, I have pulled $2,000 worth of materials. So that's what I have. I started with 3,000, so I'm going to add the 2,000. So this is a work in process the prior month, and hopefully we're going to complete it this month. Same thing with this other job. And when you pull materials out of this, you're going to decrease the inventory. You see that it was at 10,005. Oh no, that just list that doesn't have the totals or the running balance. So again, materials, when you buy materials, you debit the account, you credit however you paid for them. And you have these job sheets again, which would list everything that it is for that particular job. Labor. So factory labor, you might have it might be as simple as, let's say that you get a sheet and said, this is the job, and the job is going to be to list all of the parts, and it may be even a code. You may scan that code, and then it will automatically go, okay, my labor right now is I'm working on this job. Okay, so I'm going to track that and I am going to start time. And then when I end it, I may click again and go, okay, I'm finished with this job. And that is going to then accumulate all your labor costs and all of your, apply a percentage for benefits. And so that's going to accumulate to that particular job. So you would have work in process, and then you would credit your liabilities, which is wages payable. Could do this manually, but it would be a lot of effort. And so computers, you just have to really have computers. And then you have factory overhead. So again, what's going to happen is that at the beginning, you're going to estimate what your factory overhead is, and that's going to be dependent upon what you believe your production schedule is going to be. And the production schedule, of course, is determined by the sales forecast. So you forecast sales, you go, okay, we have this many units in inventory. We're going to sell X amount. And at the end of the year, we want a particular amount of inventory. So that's going to tell you how many units you're going to have to produce. So you have indirect materials. These are things that aren't attached to a cost object. Have indirect labor, which are things, labor that is needed, but can't be tracked to that specific product. So you have all this factory overhead. So you're going to debit factory overhead and you're going to credit whatever accounts that they came from. And then you're going to determine how are you going to allocate this overhead. And the example I showed you in the last video was that we're going to do it based on labor hours. So we're going to, for instance, if we have $500,000 in estimated factory overhead, and we have 50,000 hours that we estimate we're going to use this year, then you're going to allocate $10 of overhead for every dollar of labor, direct labor. So again, you have this is cost allocation. The factory overhead costs are allocated to jobs using a common measure related to each job. That measures the activity base or the activity driver. And so you're going to predetermine this, And you're going to say again, so if I thought $500,000 is going to be my total factory overhead, that is in the numerator, and the denominator would be whatever the base is. And here they're going to use hours as well. So they have 10,000 direct labor hours they're estimating, and their overhead costs they're estimating to be 50,000. So for every dollar of direct labor that they add, it's going to they're going to add $5 in overhead. And this is just like what I was uh, showing you the other day. All right. So again, some people use activity-based costing. So for instance, you had a jig, and so every time you had to change to manufacture this type of guitar, there are setups, and maybe you have to make a new jig. And so what you would do is you would isolate that from your other factory overhead. And so you would allocate those costs directly to that job, which makes sense. So if I have to go in and I had 50,000 in overhead, but for this particular job, it was going to cost me $1,000 to change the jig, make sure it was right. I would want to have that $1,000 uh, debited directly to that particular job, and then I would allocate the other $49,000 based on the hourly rate. So that's activity-based costing. So direct labor hours are 350. So you're going to allocate $5 for every direct labor hour. So you're going to allocate $1,750 of factory overhead to job 71. Same thing with job 72. Again, if you could say, well, but I had costs that I could directly, overhead costs that I could directly attribute to this job, you would want to allocate those. So here you would go and add that 4250 to work in process, and you would subtract it, or you would credit the factory overhead account. So the factory overhead account is increased, debited for the actual overhead cost incurred, decreased for the applied overhead. So at the end of the year, you're going to have either underapplied or overapplied. So if it's underapplied, then you're going to have to get rid of those costs somewhere, and that goes to cost of goods sold. If it's overapplied, same thing. You accounted for more overhead than you actually had, so you're going to decrease cost of goods sold. So in the first case, you're going to debit cost of goods sold and credit factory overhead. The second case, you would credit cost of goods sold and debit factory overhead because it needs to be zero at the end of the year. So here you can see that this was underapplied. So you're going to debit cost of goods sold, credit factory overhead, and that should zero out the factory overhead account. And if you're underapplied, same thing. And of course, again, you have these different um, work in process. You add direct materials, you add direct labor, you add the factory overhead. And of course, then when the job is complete, you would take that job out of work in process and move it over to finished goods, which is what's happened. So we finished job 71 here, and we've totaled all of the cost. And so we made 20 units, and you can see that if our total costs were 10,250, our unit costs are going to be 512.50. And so you would again debit finished goods because we are moving that to finished goods. So we want to increase finished goods, and we're moving it out of work in process. So we have to credit work in process to decrease that balance. And again, finished goods would turn into cost of goods sold when you actually sell it. Um, One of the things you're going to do, though, is you're going to probably look to see, hey, what did I think I was going to spend on this? So again, when we sold the product, either we're going to receive cash, but more likely it's going to be an accounts receivable. So we're going to be paid later. And so for every sales transaction, you're going to have two journal entries, or it could be one journal entries, but 4 lines. So you're going to debit accounts receivable or cash. You're going to credit revenue because you sold it. It would be in the month you actually sold it. And then you need to remove these costs from inventory and transfer them to cost of goods sold. So you can see here, we're going to make a $14,000 profit on this sale. And so now we've decreased our inventory because we no longer have the guitars. It is now an expense. We've recorded the revenue, and now we have an asset, which is going to be either accounts receivable or cash. And then period costs, again, are going to be expensed in the month that you incur them. And those period costs are any costs that are non-manufacturing related. Here's sort of a summary. You can kind of see that it looks a little busy here. So it's something, and you may have noticed these detail tabs. In the detail tabs, if you wanted to find something specific, you can find the detail tabs here. So we had sales of 34,000. We removed cost of goods sold, or removed from inventory 20,150. There's a little asterisk there. I'm not sure what the asterisk is for. Maybe it's in there. Anyway, all right. So then our gross profit is 13,850. We record our SG&As, which brings our profit, our operating income, down to 10,350. And then for service businesses, it's very similar. You know, rideshare companies, dating apps, attorneys, accountants, hospitals. So as an accountant, if I charge someone, I can look at all the cost of overhead. So I may have overhead of computers, software, licenses, etc. And then I'm going to somehow apply that. If I'm a plumber, I have cost for a van, for supplies, for management, for rent, for phones, etc. And so those are costs. And I'm going to really say, okay, well, I'm going to break that down to per hour. Or I might break it down to per hour that I think I'm going to actually, so 40 hours a week, let's say that I think I'm going to be busy 32 hours of the week, and I'm going to divide that overhead by that 32 hours. But same process. Let's see, service business using job order costing views each customer, client, or patient as a separate job for which costs are accumulated and reported. So if you're a hospital and you're doing surgery, you want to go, okay, what does it cost me? Well, I've got the building. I've got a part of the building that I have to allocate for this. I have surgical equipment. I've got monitoring equipment. I've got the staff that goes into that. So you're going to need to determine how much all those costs are so that you know how much a surgical procedure costs you. For a restaurant, you're going to probably look and go, okay, if I'm Chick-fil-A, how much are my material costs for that particular type of sandwich? How much are my labor? How much does it take to make this sandwich? And probably not that long, a minute, but you would allocate those costs. And so you need to know, but you're going to apply overhead so that you can gather all the costs and find out what does it cost you to make a chicken sandwich or French fries. And you can kind of see here wages, supplies, overhead, etc. So all right, so that's really the most of the chapter. As I said, that is the job order costing system. Processing costing system is similar, but then you're not doing it by job. You're really doing it by process. And so we'll cover that in the next video.